Hello and welcome back to Money Gist from the Central Bank, bringing you all the updates from the topmost monetary authority. I'm William Dada, and this time we are reaching you from outside the studio. The Central Bank of Nigeria is now sounding the alarm over how state governments are spending money, and according to the Apex Bank, these decisions may be making inflation worse for Nigerians. The CBN says that while it is trying to control rising prices, some actions by state governments are putting more pressure on the economy. The warning came during a meeting between the CBN and officials from different state governments organized by the Nigeria Governors Forum. Speaking at the event, the CBN's Deputy Governor for Economic Policy, Mohammed Sani Abdullahi, explained that inflation is not controlled by the federal government alone. According to him, state also affects inflation through heavy borrowing, rising debts, delayed salaries, excessive spending, contractor payments, and how they manage FAC allocations. The CBN is preparing to move Nigeria into what is called an inflation targeting system. That simply means the central bank will focus more aggressively on keeping prices stable and reducing inflation in a more transparent and predictable way. But the CBN says this plan can only work if state government also control spending and borrow responsibly. The Apex Bank warned that when states keep borrowing heavily or spend beyond their means, more money enters the system, prices rise faster, and inflation becomes harder to control. The CBN also warned against unplanned spending, excessive supplementary budgets, and growing debt levels across states. To tackle the problem, the CBN is asking states to improve revenue generation, cut dependence on overdrafts and short-term loans, manage debt better, and align spending with economic realities. The meeting included commissioners for finance, accountants general, and economic planning officials from more than 20 states. According to the CBN, stronger cooperation between the federal and state government will be critical if Nigeria wants to reduce inflation, stabilize the economy, and create long-term growth. Nigeria's banking sector is entering a new phase, and the Central Bank of Nigeria says banks must now clean up their governance and become more disciplined after raising trillions of naira in fresh capital. Over the last 2 years, Nigerian banks raised about 4.65 trillion naira as part of the CBN recapitalization program. The goal was to make banks stronger, more stable, and capable of financing bigger projects in the economy. But now the CBN says raising money is no longer enough. Speaking in Lagos at an event organized by the Chartered Institute of Directors Nigeria, CBN Governor Olayemi Kadoso, represented by the Director of Banking Supervision Olubukola Akinwumi, said the focus has now shifted to tougher supervision, stronger governance, and stricter accountability inside banks, meaning the CBN wants bank directors and executives to become more responsible with how banks are run. The Apex Bank says stronger balance sheets must now be matched with stronger discipline. That means tighter rules on insider loans, stricter checks on bank executives, improved transparency, and better succession planning when bank CEOs are leaving office. The CBN has also introduced what is called risk-based supervision. Basically, they hide the risks a bank takes, the more capital it must hold to protect depositors and financial system. This move is coming after years of governance concerns in part of the banking industry, including regulatory interventions and board shakeups. According to the CBN, these new rules are not meant to punish banks, but to prevent future banking crises and restore investor confidence in Nigeria's financial system. The bigger picture is that the CBN wants banks to use their stronger capital bases to support the real economy, especially sectors like agriculture, manufacturing, infrastructure, and small businesses that can create jobs and drive growth. The IMF has also backed Nigeria's recapitalization exercise, saying stronger bank capital will help the country absorb economic shocks and improve financial stability. The Central Bank of Nigeria is set to unveil 2 major policy initiatives that could shape the future of banking, payments, and foreign exchange operations in the country. The launch will take place on Friday, May 15, 2026 by 9 a.m. One of the key initiatives is the Nigeria Payments System Vision 2028, also known as PSV 2028. This is basically the CBN's long-term roadmap for how Nigerians will make payments over the next few years. The plan is expected to focus on faster digital payments, improved financial technology systems, stronger cybersecurity, and broader financial inclusion so more Nigerians can access banking services easily. The second initiative is the release of the fourth edition of the CBN Foreign Exchange Manual. This manual serves as an updated guide for banks, businesses, and investors on how foreign exchange transactions should be handled in Nigeria. The update is coming at a time when Nigeria is still working to stabilize the Naira, improve dollar liquidity, and rebuild investor confidence in the foreign exchange markets. The event will be held virtually and streamed live on the CBN's YouTube and Facebook platforms. This signals that the Apex Bank is trying to improve transparency and communicate its economic reforms more directly to the public and financial markets. For businesses, fintech companies, banks, and investors, this announcement could provide clearer direction on the future of Nigeria's payments ecosystem and FX management. Nigeria's central bank now has a new deputy governor, as Lamido Yuguda officially resumed office at the CBN on Monday. Yuguda took the oath of office in Abuja and was welcomed by CBN Governor Olayemi Kadoso, marking another major leadership appointment at the Apex Bank. Before the appointment, Lamido Yuguda was the Director General of Nigeria's Securities and Exchange Commission, also known as SEC, where he supervised activities in the capital market. Now at the CBN, many analysts believe his experience in banking regulation, investment, and financial markets could support the bank's ongoing reforms aimed at stabilizing inflation, strengthening the Naira, and restoring investor confidence in Nigeria's economy. The appointment also comes at a time when the CBN is pushing major financial sector reforms, including tighter banking regulations, foreign exchange reforms, and efforts to improve confidence in Nigeria's financial system. Nigeria's financial markets are entering another tense week as the Central Bank of Nigeria prepares for its next Monetary Policy Committee meeting on May 19 and 20 in Abuja. Now, if you're wondering why this meeting matters, here is a simple explanation. This is a meeting where the CBN decides whether to increase interest rates, reduce them, or leave them unchanged. And that decision affects almost everything: loans, business costs, inflation, the value of the Naira, and even the stock market. Right now, investors are nervous because Nigeria's stock market recently lost nearly 2 trillion naira amid concerns over new banking regulations and fears that borrowing costs could remain high. Many analysts believe that the CBN may likely keep interest rates unchanged at this meeting. Why? Because the bank has already raised rates aggressively over the past month, and policymakers may want more time to see whether those increases are actually slowing inflation and stabilizing the Naira. But there's still pressure on the CBN. Inflation remains high. Food prices are still painful for many Nigerians, and the Naira continues to face pressure in the foreign exchange market. So if inflation worsens before the meeting, some investors fear the CBN could still surprise the market with another rate hike. If interest rates remain high, borrowing money stays expensive for businesses and consumers. That means tougher conditions for companies, higher loan costs, and slower spending in the economy. But on the other hand, keeping rates high could help reduce inflation and support the Naira over time. So the big question now is this: will the CBN focus more on fighting inflation or supporting economic growth? All eyes will be on Abuja when the MPC meeting begins next week. Nigeria's economy may be starting to slow down, and the latest numbers from the Central Bank of Nigeria are showing signs of pressure across businesses, factories, and services. According to the CBN's new Purchasing Managers Index, also known as the PMI report, Nigeria's overall business activity dropped to 49.4 in April 2026. Now, why is that important? Anything above 50 means the economy is generally expanding, but once it drops below 50, it signals contraction, meaning businesses are slowing down instead of growing. And this is the first time Nigeria is recording contraction after 16 straight months of expansion. The slowdown was mainly seen in the industry and services sectors. Factories, manufacturers, transport companies, warehouses, and many service-based businesses reported weaker demand, fewer new orders, and lower business activity in April. In fact, transportation and warehousing recorded one of the sharpest declines during the month. The report also showed that more businesses reduced hiring, while many companies also cut down on raw material purchases because of weaker demand and rising costs. But it wasn't all bad news. Agriculture was the only major sector that still recorded growth. According to the CBN, farming-related activities expanded for the 21st consecutive month, with forestry and agricultural support services helping to keep the sector positive. Now here's another major concern: inflation pressure. Businesses reported that production costs and selling prices both increased again in April. That means companies are still spending more to operate, and many are passing those costs directly to consumers. So for Nigerians, this could mean prices may remain high even while economic activity is slowing. The CBN also linked the slowdown partly to global uncertainties and geopolitical tensions affecting business confidence and trade activities. Now, the big question yet again is, will the central bank focus more on fighting inflation, or will it start worrying more about slowing economic growth ahead of the next MPC meeting? That's the balancing act investors and businesses will be watching closely in the coming weeks. The Central Bank of Nigeria is telling non-interest banks and Islamic finance companies in Nigeria to tighten their operations and follow the rules properly as the sector continues to grow fast. The warning came during a major meeting in Abuja between the CBN, Islamic finance experts, and non-interest banking operators. Basically, the CBN is saying that as more Nigerians begin to use non-interest banking and Islamic finance products, the risks are also increasing. According to the Apex Bank, issues like poor management, weak compliance with Sharia principles, operational problems, and even technology-related risks could damage people's trust in the sector if they are not handled properly. Now, for people wondering, non-interest banking is banking that operates without traditional interest charges and follows Islamic financial principles. The CBN says this sector is helping with financial inclusion, supporting small businesses, and giving Nigerians more banking options. The bank also says Islamic fintech is growing quickly, meaning more digital apps and financial products are entering the market. Because of that, regulators want stronger oversight to make sure everything stays stable and transparent. The event brought together senior CBN officials, non-interest banks, the Bank of Industry, the Securities and Exchange Commission, and Islamic finance experts. This is also happening at a time when experts are asking for more sukuk bonds in Nigeria to help raise long-term money for infrastructure projects like roads and bridges. So the CBN is saying the Islamic finance sector is growing, but operators must manage risks properly so Nigerians can continue to trust the system. The Central Bank of Nigeria, led by Governor Olayemi Cardoso, has hosted officials from S&P Global Ratings as part of a major review of Nigeria's economy and credit rating. S&P Global Ratings is one of the world's biggest agencies that assesses countries and tells investors how financially stable they are and whether lending money to those countries is risky or safe. So anytime Nigeria is being reviewed, international investors are paying attention. During the meeting, Cardoso told the S&P team that Nigeria's economy is becoming more stable after months of reforms by the government and the CBN. He pointed to improvements in economic resilience, efforts to reduce instability in the financial system, and reforms aimed at rebuilding investors' confidence. The CBN governor also assured the rating agency that Nigeria plans to continue with these economic reforms to support long-term growth and development. Now, why should you care? Because a better credit rating can help Nigeria attract more foreign investment, reduce borrowing costs, and improve confidence in the economy. But if the rating weakens, borrowing becomes more expensive for the government and businesses, which can eventually affect jobs, investment, and even the cost of living. This latest visit is part of S&P Global's regular process of checking Nigeria's economic health and deciding how global investors should view the country's financial outlook. Nigeria's central bank is pushing stronger financial education for young people as digital banking and online payments continue to grow across the country. At the 2026 Global Money Week event in Abuja, the Central Bank of Nigeria gathered secondary school students from across the FCT to teach them practical money skills like saving, budgeting, and responsible spending. The event was themed Smart Money Talks, and according to CBN officials, financial literacy is now becoming a necessity, not a luxury. Speaking at the event, the CBN's Director of Consumer Protection and Financial Inclusion, Aisha Issa Olatinwo, said many young Nigerians are entering a fast-changing financial system, so they need the right knowledge early to avoid poor money decisions in the future. Another CBN official, Nelson Amuwa, explained that the goal is to help students become more confident when handling money and understanding financial services. The program featured interactive learning sessions, exhibitions, and practical discussions aimed at preparing students for Nigeria's increasingly digital economy. The bigger message from the CBN here is that if more Nigerians understand money management from a young age, it could help build a more financially responsible society in the future. Now, what smart money move did you wish you knew earlier, and what would you have done differently? Do you think younger people are better off today in terms of early exposure to financial education? Share your thoughts in the comments. Also, feel free to drop your comment on any of the other stories. That's all the money gist from the central bank at this time. I am Misi Dada. Like, share, and subscribe for real updates on monetary policies that concern you. See you in the next video.